now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been. Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about how Bitcoin is still one more step closer towards a drop down to $28,545. Bitcoin's been trading right here around this $30,000 range for quite some time, and now we are going to be talking about how that movement may end up leading us even farther to the downside here on today's episode of Coffee and Crypto Live. It is hashtag FinSoft Friday, so let's see some hashtag FinSoft Fridays in chat. Really appreciate your patience yesterday. We're working on some really cool things here in the office, and we had to attend to a few different things yesterday, getting some of those in order. And one of them, I'm being very vague, but I'm doing it for a reason. One of those is right over there. So excited to show you. You guys should be seeing what I'm talking about within the next week or two. Just a couple technical kinks that we have to work out, a couple things with cameras we have to figure out, and then we have something really cool that we're going to start doing, and you're going to be so excited. And it has to do with hashtag FinSoft Friday. So let's get some hype in the chat because we are going to be continuing on with that concept. If you guys don't know what financial sovereignty is, it is the concept, it is the principle of having control over your finances, over your wealth, and over your monetary systems rather than them having control over you. I believe it's a very important biblical principle that we were put on this earth to steward the earth, and we were put on this earth to go and do things with it and be good servants and stewards and rulers over it. We were told in Genesis chapter 1 verse 28 to go and have dominion over the fish of the sea and the birds of the air, and go and have dominion and subdue the earth. And so when we have dominion over something, we need to be very good stewards of it so that we can continue to have dominion over that thing. How many times throughout history has a bad king not been a good steward of his kingdom and the people rose up and overthrew him? When you have a good king or you have a good president or you have a good government, typically those things don't get overthrown. Typically those are the governments that end up growing very large. Typically those are the individuals that end up growing very wealthy and successful and prosperous, are the ones that have good stewardship over whatever it is that they've been entrusted with, and they have control over that thing, but they're using it for the betterment of that thing. As a parent, I have control over what my son does, what he eats, but I need to be a very good steward of that so that he'll see the blessings in my leadership. I've got to be a good steward. I've got to have sovereignty, but I've also got to make sure I am doing it for the betterment of others. And that's what financial sovereignty is. It's having control over your finances rather than them controlling you, that you would have control over them so that you could surrender them, and you could surrender them to the Lord so he'd tell you what to do with it if you're a man of faith or a woman of faith like I am, and go and do good things with it. Guys, I'm very excited about today's stream because we're going to be talking about the cryptocurrency market. Thank you so very much for tuning in. XRP Ally is the first person in chat, said, let's go, Jeb. What's up? Alex Nibo said, good morning. Fino said, hi. Tom M said, Kentucky Tom. What's up, Kentucky Tom? Mike Lowry in chat with the happy hashtag FinSoft Friday. Dan Nolan said, right now, let's get after it. Let's do it. Joe Bollier's in chat. Gentle Steve. Thomas Post said, morning fam. Presses start on the coffee maker. There you go. Jackson Crawford in chat said, good morning, Jeb. Morning to you as well. Vortax said, morning, my crypto critters. Good morning to you. A lot of people in chat saying, happy hashtag FinSoft Friday. Love to see it. Queen said, God bless you, Pastor Jev and family. Thank you so very much. All right. Let's go ahead and jump right on over to CoinMarketCap and go ahead and get started. Give me 1 second here just to put a few things in order. All right, let's do it. Bitcoin right now is trading at $29,783. It is down 0.43% over the last 24 hours. It is down 4.65% over the last 7 days, but it is still up 9.4% over the last 90 days and up 80% year to date. Just keep in mind, I'd like to remind you guys of this early on in the stream, that Bitcoin has had a very profitable year. We are massively higher right now than we were when we began the year at $15,755. We have now rallied from that point 14 grand, up 84% over the last 200 days. We're now in the back half of the year, and I think that we're going to see probably not another doubling. We probably won't be at $60,000 by the end of the year, but I do believe that we could rally another $5,000 to $10,000 before year's end, and we're going to talk about what that may look like today. As you can see, Bitcoin is sitting at $578 billion in market capitalization. Ethereum is sitting at $225 billion in market capitalization. And XRP is trading at 77 cents at $40 billion. As you know, the XRP case was settled in favor of in favor of Ripple for the most part. There are still some open questions about whether or not the sale to what the court called sophisticated investors, those being institutions and hedge funds, to the tune of about, I think it's $793 million worth of Ripple, of XRP rather, was a sale of security. That's up for debate. They're still looking into that. They're still adjudicating that. But there has been a decision that XRP in and of itself is not a security, and the way that it was initially distributed to the public was not a security offering, an unregistered securities offering. So that's good news, obviously. You've probably heard about that by now. XRP's been hovering around that 77 cent range. I think the majority of the market is sitting here in sideways territory, waiting for some kind of confirmed breakout, waiting for some kind of catalytic event that would break us out of the range. As you know, Bitcoin has been trading sideways for the last month or so. If we look at the chart here, Bitcoin's sideways action right here has gone on for over 30 days now. We've been ranging within about a $2,000 range between 29.5 and 31.5. And so the question now becomes, when and how shall we break out of that range? Well, let's continue analyzing that question throughout the duration of the stream, but let's look over here at coin market cap and look at the market dominance. Market dominance has been rallying quite substantially this year. As you can see, it's gone on a rally that looks somewhat similar to the Bitcoin rally. If you just look at Bitcoin over the course of this year, hide everything and go to the daily chart, you can see that this chart looks awfully similar. Excuse me, I was on the wrong screen. This chart right here looks awfully similar to this chart over here. This rally right here on market dominance corresponds very closely with the rally that we've seen on Bitcoin. And that's because every time that Bitcoin goes through a major uptrend, it ends up eating market dominance for breakfast because it is gearing up for a bull market. If you're not familiar with the history here, whenever Bitcoin goes into a bull market, oftentimes it begins that bull market with quite a lot of market dominance, which it gained in the year prior to the bull market starting. We really kicked off the bull market in roughly the beginning of 2020. And during that time, Bitcoin's market dominance was well over 50%. In fact, towards the beginning of 2021, Bitcoin's market dominance was at 70. The beginning of 2021 was right about, as you can see, here. Bitcoin's market dominance was at its peak in the midst of the height of the bull market. And so I believe that we're going to see something similar here. I think we're going to see Bitcoin's market dominance continue to grow over the next 18 months, as Bitcoin's market dominance did continue to grow for the 18 months prior to that movement. Remember, in roughly January of 2021, Bitcoin's market dominance was at 70. January of 2019, it was in the midst of a run-up. It was around 50%, like where we are now, ended up running up to 70%. I believe in the next 6 to 12 months, you're going to see a major run on market dominance for Bitcoin, and that is going to lead to Bitcoin being in prime position and territory to end up going into a major rally moving on into 2024 and especially on into 2025. That being said, there are a couple of factors on the shorter term timeframes that we need to analyze. First and foremost, you'll remember on Wednesday's stream, we discussed how Bitcoin was likely by the end of the day to break out of this symmetrical triangle pattern here, and depending on how it broke would determine how you should trade it. And Bitcoin did break bullish, briefly rallying back up to $30,400 before collapsing all the way back down to $29,500. This breakout was not very valuable for the market because it didn't last for very long and it didn't really prove anything other than previously set resistance here at $30,000, $30,450 would end up holding. The fact that we attempted a breakout here, rallied, and then crashed and fell further than where we started does indicate that the bulls are still losing strength to the bears. And it does also indicate to me that some of those bulls that bought into the market a month ago are now getting out of the market because those bulls were able to, are currently able to take profit because they're so high in profit. You need to have kind of a flip where people will sell out of their positions, take their profits, and then re-enter new positions. But to do that, naturally, if you're having a lot of bulls sell, then briefly those bulls that may otherwise be very bullish on the market turn into bears because they are adding, well, sell pressure to the space. So all of that to say, I believe we're still on track for what we've discussed over the last Goodness, it's probably been 3 weeks now where I've been just continually, gradually getting more and more confident that the movement next was not going to be a movement up here to 34, 35 immediately, but instead it was first going to be a corrective movement down here to the 28,545 region. Maybe this uptrend, maybe 28,545, maybe somewhere in between, but somewhere in this region, Bitcoin, I believe, is likely to pull back before breaking to the upside. But even that needs a catalytic event, because right now, Bitcoin is simply just trading sideways. It's not doing much of anything. And if we look at our VRVP, which is one of my favorite technical indicators, it comes with a paid version of TradingView, by the way. So if you don't have a paid version of TradingView, you can find that with the link in the description box down below. You can see Bitcoin is sitting on the bottom side of VRVP. So the way I like to think about VRVP is you basically just take your head and you turn it sideways and you look at it like a mountain, and you think about it like this. The market is a ball, and the ball moves towards the valleys because there's gravity. If you have a ball sitting on top of Mount Everest, it has a lot more potential energy than a ball sitting at the bottom of the Marianas Trench, because the ball can fall closer to Earth's core, which is where the center of gravity for our planet is. If you're sitting on top of a mountain, it's an unstable place to be. Ask any mountain climber if they feel very stable when they're sitting on the very top of the mountain. No, they don't. They don't go up there to feel stable. They go up there because it's hard, and part of what makes it hard is that it's unstable. And so Bitcoin has been sitting here atop a mountain, building a mountain at $30,250. But now, Bitcoin has more or less confirmed that we're actually going to trade on the south side of that mountain. We've been building this mountain and sitting on this side of the mountain up here, the metaphorical north side of the mountain, the north face. But right now, we've fallen below, and now we're trading on the metaphorical south face, the bottom side of that market, of that mountain. And so when you're on top of the mountain, you're typically going to take a trip in the same direction as wherever the mountain falls off. So, when we were sitting up here above our median at 30,250, we were likely going to end up rolling down the mountain up towards $31,000 to $32,000 to $33,000. Now that we've kind of seen this correction coming, and now that we've seen that Bitcoin's trading down here below 30,250, that's where we start getting into the concept that this market is probably going to move to the downside, and then we're probably going to move into that metaphorical valley. Well, where's the valley? The valley, Wares Valley, I used to live in a place near Wares Valley. If anybody knows where that is, tell me in chat what state that's from. Where's the valley? The valley is here between $28,545 and $30,000, which is why I'm so confident at this point that we're going to go to $28,545, because that's where the next mountain is. To follow the analogy, I like analogies. I've been called the king of weird analogies. I think that might just be the dad in me, but to follow the weird analogy, if you continue moving to the south here, you're going to end up running into this bluff, this massive, just sheer cliff of resistance. And Bitcoin can hit this about as fast as it wants. You can drive a moving freight train into the side of a mountain, and it's probably not going to do much to the mountain. It's a little bit, kind of, sort of what we're dealing with right now. If Bitcoin does fall off the mountain here, down into the valley, and then keeps going, eventually it's going to hit that bottom, that next mountain, the next peak, the next sheer cliff face at 28,545, and it's going to find immense support there. That's one of the great things that happened during this last correction. We built a huge block of support. It's massive. It's absolutely enormous, the amount of support that we have here. I cannot stress enough how powerful all of this support is here in the zone between roughly 26 and 28.5. And so if Bitcoin does fall down here, it is probably going to hold very, very firm, because climbing up that entire mountain takes energy. When you're going down, when you're on top of the mountain, you have potential energy. When you're at the bottom of the mountain, you need kinetic energy to get back up, and that's oftentimes a lot harder. Obviously, it's easy to release energy when it's potential energy, because it's potential. It's built up. It's, if you remember back to like 8th grade physics or whatever, it's already there. You just got to release it. All you got to do is release it. To build kinetic energy, you have to have some kind of catalytic event. That's where resistance comes into play. That's where support comes into play. To break through a level of support or resistance, you need something to give you that kinetic energy. You need something to drive that movement. You need the liquid hydrogen in your rocket. You need the gasoline in your car. You need the diesel in the train. Whatever it is, you need something to push yourselves through that barrier. And so that next barrier is at 28,545, and I think that Bitcoin will do a great job of holding it. But now, let's talk about why I believe that Bitcoin is very much so on the road to that drop down to 28,545. Well, there's a few reasons. Number one, looking here on the 4-hourly chart, we're going to go to the 4-hourly chart briefly. Looking on the 4-hourly chart, there are a few different technical indicators that are giving me pause. The first of them are our are our oscillators. Down here on the 4-hourly chart, the market attempted to have a bullish MACD cross, and that has subsequently failed. We've been under a pretty bearish MACD for quite some time. We had a small bullish MACD movement as we tried to break bullish here, but that obviously didn't work. This might be our first corrective wave in an Elliott wave 1, 2, 3, 4, 5 movement to the downside. It's kind of what it's shaping up to look like. And then we had this big drop, and that led to a correction on MACD. Now, the market is more or less just trading sideways right now, but that sideways trading also seems to be pushing us further in the direction of the downside. Could we have a double bottom here and bounce and rally? Of course we could. But what's likely is that overall larger analysis that we did out on the longer term time frames is going to lead to Bitcoin having that correction below its current lows at 29.5. Now, the RSI is in a similar boat. For quite some time, it's been under the 14 interval moving average, and it seems like it's going to stay there. If we trade sideways, both of these are going to go back to baseline because they're oscillators. If the market moves perfectly sideways for enough time, 14 days, 14 candles on the RSI, about 26 on the MACD, depends on how your settings are set up, then you're going to return to baseline because they oscillate around 0 for MACD, around 50 for the RSI. But if Bitcoin drops at all, then that's going to lead to even more crosses, which will end up pushing us even farther. Now, let's also look at Lux Algo. On the 4-hourly chart, Lux Algo gave us a sell signal here on Friday, July 14th. We have followed that for the last week. We then saw confirmation of that bearishness here on Monday, the 17th of July. And we can see that the market had not confirmed Lux Algo that aggressively yet. We had not seen the trend catcher drop as aggressively as we had with this sell signal in quite some time, indicating that we might be seeing an actual initiated break of market structure between this range around 30 to 31.5. The fact that this trend catcher moved so far was definitely something that was giving me more confidence that a larger correction was incoming. Now, out on the daily chart, there's other things I want to talk about. First and foremost, on our buy signal here on Tuesday, June 20th, we did hit the take profit. And we have also seen the trend catcher step up here, but if Bitcoin goes much lower, then we start getting into potential sell territory. We're not going to have to go much farther to start seeing the purple. The purple, of course, is what we talk about when there is a weak buy or sell signal. We saw nothing but green this time because on the very first candlestick, we were so aggressive that we didn't need any purple. But as you can see in these cases, when you have a buy or a sell signal that the Lux Algo is not very confident in just yet, then it will turn purple. We weren't very confident in the sell signal back over here just yet because, if you'll remember, Bitcoin was above this uptrending level of support, seemed like a healthy correction, ended up being a head and shoulders pattern that ended up coming true. As you can see here, the price target was pretty darn accurate. The price target for that head and shoulders pattern was around 24.1. It ended up around 24.8. So, needless to say, the purple indicates that you're starting to lose the confidence, I should say, of Lux Algo in the current trend. And so if we do see purple coming in here on the daily chart, that's something we're going to want to pay very close attention to. Now, I also want to look at the hourly chart. It's going to be a little bit too zoomed in to get great context, but it is kind of useful. We've been under a sell signal since Friday. Again, on the hourly chart, it's been confirmed ever since Monday. Again, on the hourly chart, but we're also currently under a sell signal for what it is worth. We're not under a buy signal that's saying, okay, this trend could be ending soon. No, we're under a sell signal. While we're at it down here on the hourly chart, I should also mention that Bitcoin here is sitting in this bearish. This is an interesting pattern. You don't see these very often. This is a bear pennant with an ascending triangle pattern. So the ascending triangle pattern is right here. You can see the ascending triangle pattern. The fact that it's a bear pennant comes from the fact that it is a pennant, which is just another word for triangle patterns, and is bearish because the market was moving into this pattern before the pattern was actually built. This indicates two things. Number one, it indicates a little bit of indecision. And that makes sense because Bitcoin's trading sideways for who knows? God knows. Market may trade sideways for quite some time here. It indicates indecision because an ascending triangle pattern is typically a bullish pattern. A bearish pennant is typically a bearish pattern, so they kind of cancel each other out. But generally speaking, as I've seen these a lot of times, the continuation pattern, which is the fact that it's a bearish pennant, which means that we moved into the triangle pattern, then we move the same direction out of the triangle pattern. That philosophy tends to be a lot more powerful in my mind than the philosophy of Bitcoin just going to break bullish because it's a flat, because it's an ascending triangle pattern. And you could also argue in the first place that it's not an ascending triangle pattern. You could also argue that it is a symmetrical pennant after all. So however you want to look at that, the point is the price target that I would go by here is pretty low, down around $29,000. That would also make sense because there has been a downtrending level of support that Bitcoin has been contending with for the last week and a half. Ever since the Wednesday, July the 12th, we've had this downtrend that Bitcoin just keeps coming back and touching. And it seems that if we did break bearish out of this symmetrical triangle pattern, that is exactly what we would do. And that would continue to lead us back down to 28,545. You almost get this sense when you look at this market right here that the market was kind of hanging onto the cliff and it's just kind of losing its grip and it's losing its grip. And unfortunately for the market, there's not going to be a Wile E. Coyote moment where it just sits there in midair. No, it's probably going to fall all the way down to the bottom of the valley. Valley, of course, being goes all the way down to 28,545. So it's about the best I can give you right now. It's very straightforward. Bitcoin's more or less trading sideways, but I just do want you to keep in mind the different factors for why I believe that Bitcoin is going to go through a correction relatively soon. Now, I also want to look at the Dixie and I also want to look at the SPY because both of them are giving context to this movement. Dixie has been rallying aggressively over the last 3 days. We put a 3 white soldiers candlestick formation in. It's not the cleanest 3 white soldiers I've ever seen in my life, but it technically is. There's a white, green candlestick here, green candlestick here, green candlestick here. And right now, we are sitting under this red uptrend. You might think, oh man, that's not that big a deal. It's just been in place since April. No, actually, that uptrending level of support has been relevant for about a decade. About a decade and a half, actually. This uptrending level of support goes back to touches that we set in the '08 housing bubble. Some highs that we set here in 12 and 13, some bottoms we set here in 17, some bottoms we set here in 20, and then of course, yes, it does have some relevance here in the more recent market right here on the March 18th, and then also the bottoms here that we set in February and April of 2023. We're now testing that as resistance. If the Dixie is able to break through that, which there is plenty of reason to believe that it could, the dollar is, of course, the world reserve currency, and no matter what the media tells you, that's not going anywhere anytime soon. Breaking through that level could indicate that it would go quite a bit higher. And it makes sense. The Dixie's been under this suppression for a very long time. So if the Dixie does rally, that's going to put some bearish pressure on Bitcoin, which would assist in that movement down to 28,545. Moving on, looking at the SPY, you can see the SPY right here has been pretty sideways, kind of lackadaisical this week. The SPY's just taking a breather, and now we're going to have to wait and see where it's going to go next week. I doubt there will be too much price action this week, but we're going to want to wait and see where it goes next week. We've pretty much hit at least half of the price target of this symmetrical triangle pattern, ascending triangle pattern that I discussed a couple of weeks ago when it first showed up. It could end up pushing us to at least 465, but to be honest with you guys, the stock market has rallied very aggressively, and it probably will continue generally rallying all the way back up to all-time high, probably within the next 12 months. Probably a pretty good time to get into stocks. But what I will say is that if this market does not have a correction, it's going to need one eventually. The stock market is a kind of market that can just go up and up and up and up and up and up and up forever because it's a diversified enough market. There's so much stuff in the market. It basically tracks the general growth of the global economy and the general inflation of the United States dollar both at the same time. And both of those things are pretty, just because they're such large systems individually, they are systems that typically have the ability to not have the massive amount of fluctuation that Bitcoin does. But regardless, nevertheless, it is still something that it will end up needing a correction at some point. Whether that correction happens when we hit and I think it's a when, not an if, when we hit 462, one of the last stops before all-time high, or when we hit all-time high at 480 on the SPY, or maybe it would happen somewhere else over on the DJI because the DJI is a slightly different chart. Maybe it happens when the DJI hits its resistance at $35,000 right now. That's all possible. So, by the way, while we're looking at the DJI, I want to give you a couple of pieces of context over here. This is the Dow Jones Industrial Average. This is one of the oldest averages for the United States stock market. This goes back to 1897. Yeah, back to 1987. No, not 1987. 1897. Sorry, 1987 would be pretty old. 1897 is way older. Started at $30. Now it's at $35,000. You can see how stocks are not terrible investments. It is a good idea to have some. They're up 114,000% over the last century and a quarter. Now, of course, it took a century to make those gains, but the global economy has to grow at a certain pace. for the DJI to break through this level of resistance is pretty important because this is the zone of resistance that has been testing its head on for a year. Breaking through this is a very bullish catalyst, and it could end up sending the DJI and the SPY to significant higher highs. And again, if you're a stock trader or a stock investor and you're trying to get into the stock market or just deploy more capital into the stock market, then now very well may be a time to consider that. I'm not a financial advisor. This is not financial advice. I do not wish to give you specific financial advice, but I think just about anybody who looks at the stock market would tell you right now does not seem to be a terrible time to get in, considering all the bullish news that we've seen on CPI and the bullish news that we will likely see very soon on the EFFR. And speaking of the EFFR, that's one of the last things I want to talk about before we start kind of wrapping this all up into a nice bow. Next week, we are going to have the effective federal funds rate decision come out. As you guys know, the effective federal funds rate right now is at 5.25%, and CME Group is overwhelmingly predicting a hike. Excuse me. I said a pause, a hike. The CME Group is currently predicting a hike with quite a lot of certainty. And that is interesting. And part of the reason I think that they may be predicting that is because, sorry, I read that wrong originally. Part of the reason that they may be predicting that right now is because of that core inflation. So if we go over to bls.gov/CPI, then of course we've seen that inflation, headline inflation has come under control quite aggressively. It's currently sitting at 3%. That being said, I think the Fed is still concerned about that 4.8% all items inflation. And the other thing to keep in mind is that the United States inflation right now is going to be difficult to get under control because the United States is undergoing one of the largest industrialization period moments in its entire history. There is more industrial build out going on right now in the United States of America. I'm talking highways, I'm talking roads, I'm talking factories, I'm talking infrastructure, I'm talking solar, hydroelectric, everything. We are seeing one of the largest industrial build-outs in our lifetime. I don't care how old you are, in our lifetime. And that is always going to be inflationary. When you build something, it is inflationary. Why? Because there's sunk cost. When you build a new superhighway, that is going to take a lot of money and is not going to contribute to the economy for a few years while the thing's being built. We saw that happen with the interstate system. The entire interstate highway system cost in today's dollars about $500 billion. It has brought in probably $5 trillion in increased GDP. Maybe that might be a little bit aggressive, but I'd say at least $3 trillion. No, actually, I would take that back. It probably at least $5 trillion in increased GDP for the United States every single year since it was built. It was one of the greatest investments this country ever made on a governmental level. But at the time it was being built, it was hugely inflationary because it took a massive allocation of the United States federal budget, cost a ton of money, and that money was not going to be seen back as profit for years as the entire country got used to this idea of, wow, we have superhighways connecting everywhere. I can get on the I-10 and drive from Jacksonville to Los Angeles. That's crazy. That is a revolutionary idea in the history of mankind. I can get in a car and drive for 2.5 days, or I can do it in a day if I just don't want to sleep. I can drive west for 2,000 miles. The same trek that Lewis and Clark took 6, 7, 8, 9 months and people died on the journey. You can do that in 2 days. That's a big deal. So it's inflationary at the time, ended up having profit. Similar situations going on right now with the United States economy. We're having a huge amount of industrial build out on the private and the public scale, on private and public investment, and that is leading to a huge amount of inflation that the Fed is just not going to be able to get under control because by its very nature, the amount of construction that's going on right now, the amount of build out, the amount of economic movement going on is going to lead to some inflation. And so it actually does stand to reason that they would want to hike rates one more time because there are still a lot of hawks in the Fed that want to see the effective federal funds rate go up because of that core inflation and also because of all of the build out that's going on in the United States economy right now. So just keep that in mind. If you do see 1 or 2 more hikes, I think that it's because of that. But I think there's also another factor. I think that when the Fed is looking at the economy, it sees the amount of shock and the amount of awe and the amount of damage that is done to the United States economy by hiking rates. And that might be good in the long term, and it probably is. But on the short term, it has been very detrimental to the economy. It's been very detrimental to investment. even though there's still a lot going on. It's been very detrimental to the outlook because people are worried, is there going to be another rate hike? I think Jerome Powell, just kind of thinking about the way that he thinks about these things, I think that he is going to want to go ahead and get the hikes out of the way rather than hiking right now and then waiting 6 months and then having to hike again. And if you want my reasoning on why I believe that the Fed is going to end up doing that, you can look no further than the history. The Fed very rarely goes through a hiking process, and this is in a log. The Fed very rarely goes through a hiking process where it hikes and then it stops for a year and then it keeps hiking. It just doesn't really do that. It gets all its hiking out of the way and then it plateaus, and then when it's time, they crash it. And I think that's what Jerome Powell may be looking for right now. Maybe a pause here or there, but in general, whatever their target is internally, whether it's 5.75, 6, whatever, I think they want to get there, and they want to have that tool at their disposal. And I'll kind of wrap it up with this. First and foremost, the reason that this is important for Bitcoin is that rate hikes, generally speaking, are bad for Bitcoin, at least in the short term. Why? Because they inherently, intrinsically, the reason that they exist is the theory is that it's supposed to bring strength back to the United States dollar. So if the rates are hiking, then that leads people to thinking, oh, wow, they're really serious about getting the United States dollar under control. Maybe I should go invest in the dollar because the dollar is being taken very seriously. Its health is being taken very seriously by the Fed. I'm not saying that's necessarily the way it is, but that's definitely the way that people look at it. Now, as far as why the Fed is doing this, a little bit of geopolitical background. There are two reasons. Geopolitically, there are more, but there are two major reasons why the United States wants the dollar to be ridiculously strong right now. Three, actually. Let's run through them from least significant to most significant. The least significant reason that everybody wants to tell you is the most significant, but it is a significant reason why the United States wants a strong dollar is because there is this whole de-dollarization craze going on around the media, and to a certain degree, there are certain movements going on globally that are concerning for United States officials that are in charge of the dollar. You've got China trying to play the middleman and trying to put the Chinese yuan, into this place of being a reserve currency so that different nations are trading in the currency. So again, I'll just kind of explain what I mean by reserve currency. When we talk about a reserve currency, we're talking about a currency that different nations will use as a medium of exchange between their two currencies. So if you've got, let's see, if you've got the Swedish kroner and you've got the Swiss franc, whatever currency you want, as far as not Swiss franc, but the euro, then those two nations might be able to trade very easily because they're right next door to each other geographically. There's going to be a lot of trade going on between Sweden and between the Eurozone. But if you've got the Swedish kroner and you've got another currency like the, I don't know, the Japanese currency, whatever, then there's much less likelihood that there's going to be enough trade between those two currencies to facilitate an easy currency transaction by saying, I want Swedish kroner, you want my Japanese currency, let's trade goods and services and then also hand money back and forth, and now we have each other's currency, now we can go and do something with it because we want to buy something else in your currency. Instead, the much easier thing to do is say, all right, who's the biggest currency that we're all already trading with anyway? Let's just use that as an intermediate, and then it's much easier to trade Swedish kroner into dollar and then dollar into the Japanese currency than it is to trade the Japanese currency into the Swedish kroner. That's a much more difficult transaction. And so the United States dollar for the last 100 years has been the currency that's facilitated those inter-currency transactions. And that has given the United States the world reserve currency status, mainly because it's the largest military and largest economy on planet Earth. And that's not going anywhere. It's not going anywhere. You know why? Because there's $100 trillion nearly of transactions that take place in the United States dollar. And you need a currency that has tens of trillions of dollars of banknotes to be able to lubricate, not necessarily bank physical notes, but currency in circulation to be able to lubricate the global markets to do that. The United States wants to maintain its dollar hegemony because there are some small, very insignificant, just so we're understood, attacks on the dollar, but they do see that and they want to kind of push back on that. Hiking interest rates helps with that. The other reason they want to hike interest rates is to help with inflation, but you already know that. The other two reasons that I think are relatively significant and pretty interesting are the war in Ukraine. The United States government does not want to get into a boots-on-the-ground shooting war with Russia on European soil because that would be World War III and it could very easily escalate to a nuclear Armageddon. And you want to know why? I'll tell you why. If Russia were to win the war in Ukraine and were to somehow, this is very unlikely at this point in my opinion, somehow push Ukraine all the way back to Kiev and capitulate and the entire country, they knock out the leader, whatever it is that they do. And if Russia were able to somehow win this war and they were able to conquer all of Ukraine and push on towards their next target, which is Romania, Hungary, Poland, Lithuania, Latvia, Estonia, East Germany, Finland, if they were to be able to push on to all of these other NATO countries by Article 5, the most powerful military defensive pact in the history of mankind, would demand that the United States get involved in direct military conflict with the former Soviet Union and Russia. Doing so would be a disaster. Nobody wants that. The United States is perfectly happy to throw its 30-year-old military junk technology at Russia and eat away at their military so they're weaker than ever. They're perfectly happy to throw, not troops, but equipment towards the Ukrainians and let them throw them into the teeth of the Russians and grind them down that way. But the United States does not want to get in a shooting war with Russia. Nobody wants to do that. Not Russia probably doesn't want to do that, but they're just crazy enough to try sometimes. When you have a state backed into a corner, sometimes they do crazy things. And so the United States can help to fight against Russia by maintaining a very strong dollar, because when you have a very strong dollar, that incentivizes other nations to use the dollar and to not, and this is where it comes in handy, to not use the Russian ruble. The stronger the United States dollar is, the less likely it is for other nations to want to have anything to do with the ruble, which is the Russian currency, because if they have something to do with the ruble, they have something to do with the United States dollar, then the United States has leverage over them to say, hey, wait a second, didn't we embargo Russia? So why are you using rubles when you have dollars? The United States wants to maintain a very strong currency because it allows them to continue winning the war against Russia. Very similar thing against China. China's got about 10 years demographically, politically, and as it relates to President Xi Jinping, dictator Xi Jinping, more likely, before they run out of an opportunity to invade Taiwan. Taiwan are the Republic of China, if you will, the ROC and the PROC have been at war officially for 70 years. Mainland China has never been able to conquer Taiwan because Taiwan has had security guarantees from the United States, not necessarily de jure, but definitely de facto, ever since. The Chinese want that territory, and it's been one of their longest standing, most important military goals. And so if the United States is able to maintain a very strong dollar, then that helps to suppress the Chinese currency, the yuan, and help to suppress their ability to build for a military buildup for an attack on Taiwan. Because the fact is, if the Chinese did attack Taiwan, we would come to defend them. The president, Joe Biden, just said that, and the Chinese have been planning for that for 50 years anyway. The Chinese have always planned for the United States stepping in to defend Taiwan, so that's honestly not really a surprise to anybody. If that were to happen, that, by most simulations, would cost at least 2 aircraft carriers and tens of thousands of American military personnel. And, of course, that would be a direct conflict between 2 nuclear-armed states that have enough bombs on either side to destroy humanity. So nobody wants a war between the United States and China either. One of the easiest ways for the United States to fix all of these problems, to fend off all of these problems, and continue to power project so that it's able to continue being in charge of all of these problems, inflation at home. This little tiny spat with de-dollarization. Russia and China, the way that the United States wins all of those battles is by having a strong dollar. And so all of that to say, that's a lot of geopolitics, that's a lot of kind of background historical analysis, but all of that to say, the reason that the Fed is likely to continue hiking rates is because it wants to remain powerful in all of those theaters, because the United States is not involved in any military theater, nor has it been in quite some time, but it is constantly involved in economic theaters of battle, and those are some of the most important ones. And one of the ways that you maintain that is by sacrificing short-term economic growth, by having high interest rates, which frankly, if you're trying to grow based on debt anyway, then you're probably doing it wrong. That's the way most of the country does it, though. Sacrifice short-term growth for the sake of having a strong dollar and continue to be on top of those situations. So it wouldn't surprise me if the Fed did hike rates more. I don't think they really need to, but it would not be at all surprising in my boat. All right. Really appreciate all of you guys tuning in. Let's go ahead and read some chat. Got about 6 minutes left. Thank you guys so very much. Let's see. All righty. Any questions you guys have, definitely tell me in chat. So when I say Bitcoin's on the road to a drop, I just want to kind of remind you, because I like to let you guys know why I title streams the way I do. The reason I say it that way is because I believe that Bitcoin is getting closer to a drop down to 28,545. Very, very simple. Fingers crossed, cheap BTC is what we all need. Yeah, cheap Bitcoin is a lovely thing. Would love, love, love to see cheaper Bitcoin. Blow off tops doesn't need any depth. Hashtag view. Queen said, smash the likes. Thank you so much. Is 50 basis points priced in? I think at this point, most people kind of see the light at the end of the tunnel. I think at this point, most people see that there is probably, that there is more than likely an end to this relatively soon, at least by 6%. The Fed will probably be done. But as I said, the Fed very, very, very much wants to get all of it done at once. The Fed doesn't want to have not hiked enough. They don't want to have to come back in 12 months and say, oh, man, we didn't hike enough. And the reason that the Fed doesn't want to do that is because I think there probably is some malice at the Fed, but I think in general, I think their goal is to kind of help as much as they can. Now, I know people don't like the Fed. I'm not the biggest fan of the Fed, but I think some degree their heart is to kind of help the country a little bit. And and that's not to say I trust them, but I think that to some degree that is part of the conversation. Part of the reason that I think that they want to finish hiking the rates is because if, and go ahead and do however much they're going to do and finish it, is because if they do stop hiking rates for 12 months, and then we see that they have to start hiking rates again 12, 18 months later, that is going to send the market into a tailspin. And the reason is if people start seeing, okay, we stopped hiking rates, rate hikes are over, they're done with, and the Fed realizes they were wrong and they needed to hike rates further because of some geopolitical event or because they just didn't do enough, then that is huge amounts of egg on their face. You could look at it through they want to do what's good for the country. You could also look at it through the lens of they don't want to look stupid because they have careers to care about. However you want to look at it, depends on how cynical you are or how realistic you are. There's a bit of both in there. The fact of the matter is, the Fed, no matter how you slice it, does not want to have to do two rounds of hiking. If they're going to do the hiking, they want to do it all at once, get it over with, so people are not planning for a Fed rate pause, for a continued pause and an eventual drop. Because after they pause, based on historical analysis, people are going to start looking for the drop. And then if instead of seeing a drop, which they hope for and priced in into their investments, into the amount of money they deployed, remember, we're talking about a $27 trillion United States economy here. When that economy sees that and they start investing as if there's going to be a continued rate pause market and eventually a rate dropping market, and then the rates start going back up, the Fed is going to have their pants lit on fire by Capitol Hill and also by the electorate, and everybody's going to be ticked off at them. They would rather just get it over with now and then not have to deal with it anymore. So it wouldn't surprise me if we do continue to see a couple more rate hikes through the course of this year. I honestly wasn't really expecting it to be this month, but it looks like that's what CME Group is predicting, and they're predicting with 99.8% likelihood. So CME Group is probably right here. We're probably going to see another hike. That hike in the short term might not be the best thing for Bitcoin. In the long term, getting it all out of the way before the halving comes in is actually one of the best things that could happen to Bitcoin, because it's going to happen one way or another. JB donated $5. If there isn't going to be any new lower lows, why aren't we in the bull cycle? Great question, JB. I believe we actually are. I believe we actually are in the preliminary stages of the bull market, and it's something that I like to call the pre-halving phase of the bull market. I don't have my chart up anymore. I kept it up for like 6 months, but I ended up changing it. But I had this chart here. Oh, I do. Here it is. Like I said, this is a chart I've had just for a long time, kind of explaining this. This teal, beige, I'm colorblind, whatever color box this is right here, represents what I call the pre-halving phase of the bull market. The halving phase... The pre-halving phase represents the time that the market is in before the halving, about the first year before the halving. The halving right now is projected to happen around April 27th. We've gotten some new data on that, so I'll just kind of move that line over. The halving is predicted to happen right around here. End of the year is right here. My price targets are up here, 35K at the least, 50 at the highest. It's probably going to tend more towards the bottom of that, maybe 35 to 37. But this whole box right here, as you can see, is where Bitcoin is in the pre-halving phase of the bull market. And honestly, I could be a little bit more generous and give this a little bit more room. I could say it's something like this. The halving phase, the next halving is going to more than likely send Bitcoin very, very, very fast and far to the upside. But until then, we're in this pre-halving phase of the bull market where we are continuing to move bullish. We have set a higher high than the previous bear market local high. You see we have 3 major highs that we experienced during the last bear market. We've already bested one of them. The next one coming in on the BTC one, that would be the CME futures. Oop, that's the wrong button, sorry. On the CME futures chart, there is a gap right here between 34.5 and 35.5. This is one of our next major price targets. Getting above that's going to be critical. And of course, if Bitcoin's able to get up above $35,000, we'll already be at that end of year price target that I set back in March. Back in March, I told you guys we'll probably be at 35 to 50. This pre-halving phase of the bull market does mean that we're moving into the bull market, and technically speaking, you could argue that we are in the very beginning stages of a bull market right now, and I think that would be accurate. All right, guys, really appreciate all of you for tuning in, and thank you so much, JB, for that donation. That's very helpful. Guys, if you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and also make sure to sign up for Lux Algo using coupon code JEB, that's JEBB, 30 for 30% off at checkout. You're going to be so glad you did, because that coupon code is going to save you $20.40 every single month, and it's also going to save you almost $400 in the first year if you use Lux Algo's the Lux Algo coupon code JEB30 and the yearly subscription. You're going to save, I think it's over $400, about 70%. So make sure you sign up for Lux Algo using that coupon code, and also make sure you sign up for Principles of Technical Analysis over in Club DeFi. You can find the link for that down below. That's the place where I'm going to teach you everything that you need to know about technical analysis so that you can become an expert trader and profit in these markets. Thank you guys so very much for tuning in. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling.